Hi there, it's Callum Newman for today's Insider. Now, I'm the editor of Cycles, Trends and Forecasts with Catherine Cashmore. But today we're handing the floor over to my colleague Brian, who edits Gold Stock Pro, because gold stocks are in a very, very interesting place right now. I'm watching it. Obviously, he's watching it and covering it all the time. Brian, thank you for coming on. It's been a funny year for gold stocks in Australia. They've been down, they've been up, they've been down. Now they look to have based out at the end of probably September, I'd say. Can you give us your perspective on what you see? Because from my observation is they just look so cheap relative to the money they're making.
Yep. Hi, Cal, and hello to those who are joining us. I'm quite glad to actually see where gold has been moving in the past week. In fact, you could say that at the end of September, gold had its sell-off on the back of, which I thought was very strange, the Evergrande debt crisis, which I believe is still playing out, even though the mainstream news and finance media is kind of focusing away from it.
Moved on, yeah.
They moved on, except you can almost feel that there's a ghost. It's Banquo's ghost. It's always coming back every now and then on the news saying, well, something's happening, but we've got it under control. And in terms of its effect on gold, like I actually thought, and my subscribers would know, I was actually calling people to be cautious on gold at the bottom, which I think is so some of you guys will now know that I'm probably a good indicator of if I'm cautious about gold, it's probably near the bottom. I'm not the best timer in that sense. But over the month of October, I saw that the gold index actually went up by about 12 to 15%. And some of the bigger gold producers went up about 25 to as much as 40%. In the case of West African Resources, they again once more bolted out of the stables and went up by as much as 50%.
It was a big rally.
Paring back. Yeah, it was pretty impressive. Before paring back down, because they're raising capital to buy up a big deposit. I think if I remember right, it's something like 6 million ounce gold resource. So we're also seeing a couple of things happen in the mid-tier space as well. We also are seeing Gold Road Resources and Ramelius Resources have vied for Apollo Consolidated, and this morning Gold Road actually said, or was it yesterday? Gold Road actually said, "Look, we're not going to up the bid. We're going to fold." And we also have Kirkland Lake merging with Agnico Eagle to form the third largest gold miner, and it's actually probably one of the best because it will have all its mine properties in tier 1 jurisdictions, as in safe developed countries with stable legal, relatively stable legal environment.
Just let me jump in there for a second. I just want to go back to the initial point where you mentioned that timing wise, gold can be very difficult because it's very volatile, and then the stocks jump all over the place, and there's a sort of macro overlay that you can't control if the market's nervous or bullish or what have you. But you're a long-term guy, right? So you're prepared to give these 1 to 3 years, perhaps even longer. And I know you look at the valuations quite closely. Surely gold stocks in Australia must be as cheap as they've almost ever been relative to their cash flows right now. Is that fair to say, or do you think?
To a certain extent, you could say that with the mid-tier miners, I am actually seeing the valuation multiples. Haven't seen it that low since maybe 2017, 2018, when gold actually was taking a break, and they had a 18-month or so just meandering between the ranges. So I remember during that time, I was just thinking all these companies that I want to buy, but not enough cash to actually throw into it. And this is the same type of feeling I am seeing with the mid-tiers. Now, for the large producers, with Northern Star, for example, I was looking at it and I'm going, the costs are going up. And in fact, the entire gold mining industry, I would say the only dark cloud, I'd say, is that costs are going up, and that might be the reason why some of these mining companies are trading at cheap multiples. But it may not be so cheap if the costs continue to rise, should the price of oil continue to rise and gold doesn't catch up.
Interesting you say that, because diesel obviously puts pressure on across the mining industry. Then we have the labor problems in Western Australia. So maybe you're absolutely right. The market is discounting these costs going up. But when I look at it, that's probably part of the big drawdown we've seen since last year in gold stocks. I guess the way I would phrase it, if you were ever going to enter into gold, now would be a very good time to consider it. But we're also always hostage to the US gold price here. So here in Australia, they're making good money. The market, I guess, knows it. But it's giving them big cash flows. We get the Ramelius you mentioned, some of those mid-tier ones. They have lots of cash on the books to go and buy up the little projects. Do you have a view on what the US dollar gold price is going to do?
So when I looked at this, the Federal Reserve they announced last Wednesday about how they were going to start tapering the monetary supply over there. And oddly enough, and also you could say not very oddly, if you actually are familiar with Nick Hubble's article about gold and also what happens with central banks when they tighten, gold seems to go down when there is talk of tapering, but it seems like once they actually do it and once they start raising interest rates, gold will also follow upwards because of a safe haven. Because gold as a safe haven status actually comes back into play. This happens when you have a prolonged period of uncontrolled currency creation, and therefore investors are very much taking risk well beyond what would be sensible. And once they raise interest rates, it doesn't take too long before the markets are going to start correcting. And therefore, with the price of gold, I think that's why it's actually headed upwards, because there is a view that there are investors, the smart money is probably now identifying gold as having bottomed, and they're moving their funds into gold and gold mining companies as part of the whole tightening cycle. So they're getting ahead of the game. And I think, and I'm advising my subscribers to do exactly the same thing if they have not already started doing that over the last month.
Well, I think interesting you talk about sort of macro turbulence, because I think in 2020, a lot of investors, they sensed that the market was going to rise back up after the COVID crash, but they kind of hedged their bets a little bit by holding gold stocks as a part of their portfolio and go, well, look, if this doesn't work out, my gold stocks will pay off and ease some of the hurt. And I think as the recovery became more solid and in the market, it's like, no, it's genuine, it's going to come back, we can see beyond it. Those investors started to go, well, I don't really need the gold stocks anymore. And they did reach fairly rich valuations there for a while. And they'd had a big run up. So I think you're right. Yeah, definitely that could come back into play again, where as we move forward into, okay, we've got the recovery now, that's priced in, what happens next? If things do get a little bit wobbly in the US, that buying pressure will come back, and the valuations are there to support that thesis to go, yeah, it's not such a crazy idea just to hedge things a little bit with gold.
Yeah, what I did actually look at was trying to look for historical parallels as to what happens when we start the gold rally, like the beginning of the cycle where gold rallies, and at what happens near the end of it. And I was looking closely at what happened from March last year to around August to September last year, when gold mining stocks topped out. And what I did notice was a lot of the mining companies started raising capital in around mid-June to early August. And that is a sign which I'll be looking for once more as to when, and I'm saying I'm getting ahead of myself very early here, is the gold mining companies rally, I would consider to be well in the tooth when you have a large number of companies raising capital. And the reason why I say that is the companies that are on my recommendation list, especially for Gold Stock Pro, some of these companies are actually moving towards the mine building phase, or at least they're trying to get financing. So this would be the rally should gold actually rally this time round. I think a lot of these companies are waiting to press the trigger in order to raise maybe $10 to $20 million of capital to move their plans forward. So this is a type of thing which I think if you know your history well as a gold mining investor and also in mining companies in general, you should remember that all these companies may be a year to 5 years away from production, and they don't want to actually have too much cash right now because they don't want to dilute their capital too much. But at the same time, they don't want to be starved of cash because they could be caught out at the worst part of the cycle where they end up having to raise when they're near the bottom. And I've seen a number of companies do that. It's very heartbreaking. I don't want that to happen with the companies on my recommendation list. So that's a type of thing which I've been keeping a very sharp lookout for. Just going back in history while I can. The good thing about this 12 months is the market has been stagnant, so it allows me to sit down and look at history and kind of like track where we are in the cycle.
Yeah, so that's sort of the macro background we've given there. But obviously with individual gold stocks, they have their own catalysts that you can sort of hunt too. So obviously with the cash flows very good, the gold price very strong, there's obviously a lot of drilling still going on where they're looking to either extend their operations, or you get the pure play explorers. I mean, do you follow those sort of drilling schedules quite closely as well?
Well, the drilling schedules, I actually am aware, having inherited the portfolio from my predecessor, Shay Russell. She's got her ears very close to the ground, and it seems that the laboratories that are testing the drill samples are still quite backlogged. I remember one of my companies that I recommended back in late May, they were supposed to release their mine plan in around June. But the thing is, the drill sample analyses have taken ages, and the company is now saying, well, we're going to try to release our mine plan, the preliminary mine plan in November. And I'm now almost of the view of I'll believe it when I see it. A number of these companies are actually releasing results of their drilling probably from months ago. So there's still things that are behind. In fact, as we're recording today, Chalice Mining. Did you read the news on that?
I did, yes.
That was actually long. That was actually longer. It was something that we have been waiting quite a long time for. And the only unfortunate thing is, to my subscribers, I'm sorry that I got you guys out at a good price, and I said that we'll try to come in, and we missed it this time. It doesn't mean that we have missed it completely, because my feeling is now with such a big deposit, they're going to need quite a bit of cash, and $87 million of cash in the bank right now means that they'll be back in the market soon. So we haven't seen the last of Chalice Mining. So
but that's not even gold, any. They hit but this wasn't
it's
gold.
Platinum, palladium, nickel, copper.
Nickel was the other one. Yeah.
But
yeah, so I know Chalice well, obviously, but Yeah,
Yeah.
you're absolutely right. You can't always get it right, so it's all good.
Yeah, precious metals. We're happy to add back in companies with precious metals besides gold and silver.
Okay.
Especially because of the whole talk of clean energy, and you need palladium, you need platinum.
Yeah, I've read that for a long time actually. They're very you don't hear them about them as much, but they are very interesting opportunities to follow.
Yeah.
In terms of Gold Stock Pro, you generally focus on existing producers, right? Less so than like pure explorers and the developers.
So with Gold Star Pro, it's more for companies that have a mine deposit. They may be in the feasibility stage, so they're drilling and they're refining working at how big the ore body is. They're formulating their mine plans. In terms of explorers, I think there's two. It's a very speculative over there. It's kind of like tossing, not even tossing a coin. It's actually playing on the roulette table. There will be times when I will actually recommend a pure play explorer, but I think there is a greater chance of success. And I know Rick Rule and Jordan Roy Byrne agrees with me on this one. They like to go for companies with an existing deposit. And even though there is slight de-risking involved, but you have more certainty because there is an anchor to the value of these companies. And my view is in the next rally, if you look at if March 2020 to September 2020 is any indicator of what's to come in the future, some of these companies that are close to bringing their mine plan, I think the management is well aware that they need to manage their news flow very well, get the investors excited, get the price up, raise a capital, raise $20 to $50 million to move to the next stage. And then once they get to the mine building stage, then they're riding the upside of the Lassonde curve. And that's exactly what they'll need to do if they're going to increase their chances of bringing their deposit to production and keeping their shareholders happy.
Yeah, it's interesting what you say about pure explorers and what have you. I like to do the same thing. I always prefer a company to have multiple options. But there was one exception once, and it was Chalice Mining when it was called Chalice Gold Mining.
Yeah.
But that was because at that stage, it was just so cheap. It had like, I still remember it. It was 12 cents when I came across it, and it had 10 cents in cash. And so every now and again, you get a special situation like that, but they don't come along that often, and B, you don't know that they're going to go and discover the best nickel thing in 20 years.
Yeah, that's true. And also, you tend to remember those success stories and forget about the
ones that didn't work.
7
absolutely.
That sounded great on paper, but turned out that they ran out of cash, or they diluted massively.
Yeah, that's happened.
But yeah, that was a very good call for you to.
But the reason this is the reason why I'm very interested in gold right now is that the risk to me, obviously gold stocks are always risky, and any stock is risky, but because they've come down so much from where they were previously, a lot of that risk has been taken out of them. Now, you've always got gold price risk and production risk and all those type of things. But there's definitely, I think it's fair to say, value there relative to what could be a strong 5 years for gold prices. Why could that be? Well, we've got, as you said earlier, money creation going crazy around the world, probably a bear market for bonds coming, and probably demand for hard assets, and not to mention, countries around the world trying to diversify away from the US dollar. And one way they do that is by holding gold.
Yeah.
So I see a lot of positives, but again, it depends on your time frame. And that's why I think if you're watching this and you're biased towards the longer time, the work that you do, finding those best projects. And I remember I hit you up a month or two ago, and I had come across that. I can't remember the name, the one in the Philippines. And you're
Medusa.
like, well, maybe that one, but I got these other ones I like more.
Yeah.
So that's what you can do. So, roughly, you mentioned that you are happy to look a little bit outside the gold sector, but probably to the end of the year, are you the service purely focusing on gold for the next month or two?
Yeah, definitely. The reason is that you can see some of these companies like, look, the last Friday, since last Thursday when we came off where the market's trading off of the Federal Reserve's news, the larger gold stocks have just started to rumble, and the smaller speculative companies, they're a bit all over the place. There are some which are jumping 7 or 8%, but there are some which are just still lingering. And my suspicion is that this time round, it's the larger companies that are going to lead the charge. So therefore, it gives me plenty of room to alert my subscribers to get ready to buy a lot more of these speculative mining companies, because if the first 20% of the rally, and I'm not talking about the 20% rise in the price of gold. I'm talking about the rally itself. The first wave is where the easiest profits are made, and you actually, by the time you see it happen, you've missed it. You had to actually be camping out all this time while it appears that you're watching the grass grow. And we watched a lot of grass grow during the last 6-7 months.
You say you're watching the grass grow in the gold sector, but that's part of how you build up your expertise, because you're constantly following the same companies. You learn how the stocks react to news and which ones are going to lead the pack, which ones are a little bit slower. And I can just tell by observation, the gold market in 2020 was a lot different to the one today. In 2020 was much more speculative. Like a lot of those little stocks would come out with any news and they would roar up. That doesn't happen today. And so that's another reason why, at least as at my observation, I feel it's a better entry now, because you don't have that same speculative short-term money hunting the sort of quick fire returns. So whether long-term we'll be right about the gold sector, we don't know. But certainly an entry point now, to me, makes more sense than it did in August 2020, when it was very popular and everybody was trying to ride the momentum and the fear around COVID was a lot higher. But that was actually more risky back then than it is now, to me. So it's very interesting. I'm very interested in the gold sector, and I'd encourage anyone watching to consider it and to take a look at the work you're doing, because as we know, commodities go in cycles and it doesn't ever feel that good, but you've got to be interested when they're weak than when they're strong, because when they're strong is when, that's when you start to look to take your profits and all that sort of thing. So for me, two very interesting ones. If you had to pick the hottest ones right now, they'd be lithium and uranium. But the ones that are interesting to me are iron ore and gold, because they're the ones that have sold down. So we'll see what happens from here. So thank you for coming on. And, I won't be hosting the next Insider video, but Woody will have one for you next Friday. And if you're interested in Brian's work, we'll put the links in at the bottom of the video, and we'll catch you soon.
Thanks very much, Cal, and all the best to you guys. I hope that some of you will sign up, because there's no better time to sign up when you think that it's the craziest thing, because the action is happening everywhere else but here. But that's when the action will start.